Hello, my dear students and friends. In this video, I'm going to explain different types of accounting. As you can see on the screen, three types of accountings are highlighted: financial accounting, cost accounting, and managerial accounting. Although we have several other branches of accounting like inflation accounting, corporate accounting, public accounting, and human resource accounting, but these three types of accountings are much common, and it basically can fulfill the objective of the organization. Of course, we cannot go in deep about each type of accounting. Why? Because each of them is a subject. It means each of them has their own contents and scopes. We cannot go in deep, but we will discuss only the definition of each. The definition of financial accounting, definition of cost accounting, as well as the definition of managerial accounting. Now let us look for the definition of each one by one. The first one is financial accounting. Financial accounting is the oldest branch of accounting, or we can say financial accounting sometimes can be called the father of accounting. There is a simple definition for financial accounting. We can define financial accounting in this way. Of course, don't forget that the previous definition or the definition which we have given in the previous videos for the accounting, that can be for the whole branch of accounting. It means that is the accounting, whether it is financial accounting, whether it's a cost accounting, or whether it is managerial accounting. The definition of accounting is that one, the same which we said. It is the process of identifying, recording, classifying, summarizing, and so on. But now we want to define different branches of accounting in terms of their objectives. It means in terms of their scopes, that if all branches of accountings are initiated or all branches of accountings are introduced, what are the some common objective, what are the some specific objective for each of them? For example, what is the purpose of financial accounting? What is the purpose of cost accounting? And what is the purpose of managerial accounting? Otherwise, all of them are the branches of accounting, or we can say all of them are accounting. So they do the same thing, they record, they classify, and summarize, finally they provide a report. But here, if we want to define different branches of accounting, we just define from their objective or from their scopes perspective. So financial accounting can be defined in this way. Financial accounting is mainly concerned with the preparation of financial statements and communication of accounting information to the external users, including shareholder, employees, etc. It is aimed to ascertain the profit and loss and show the financial position of the business. See, this is the purpose of financial accounting. The main responsibility of financial accounting is to prepare financial statements. Financial statements, what is financial statements? We will explain inshallah in the next chapter. But for the time being, financial statements are those statements which are prepared at the end of the accounting period to show the financial position and performance of the business. And of course, there are basically four types of financial statement. We will explain it inshallah in details with the theories, with the examples and practical or numerical examples. So my point is here to explain the financial accounting. As I said, the main responsibility of financial accounting is to prepare the financial statements, and after providing the financial statements, it has to communicate this one. To whom? To the external users. We know who are the external users of accounting information. Not only the external users, but of course to the shareholders as well as to the employees. So now the question is, if they want to provide the financial statements and communicate to the external users, what is the purpose of this one? Or for what purpose they want to make the financial statements? They want to make the financial statements to do what? To ascertain the profit and loss, to show that whether the business made profit or loss, or we can say whether the business suffered loss or whether the business made profit, and also to show the financial position of the business, right? So the two things or two main objectives are behind financial accounting. Financial accounting is responsible to make financial statements communicated to the external users. Don't forget this part, that financial accounting is especially made for the external users. But we cannot say only for external users, especially for external users, but internal users also can use it. So if external users use financial accounting, so what they are going to find from the financial accounting, they can find out the profit and loss, as well as they can find out the financial statements of the business. Although we will explain the financial statements or profit and loss or financial position later on, but for the time being, in order to understand the basic meaning of financial accounting, so here I have made a simple example of financial statements. In profit and loss statement, which is a part of financial statement, in this statement, we record two things. We record revenues or awayed. Also, we record what? Expenses or masarif. From the total of revenue or the total of awayed, for example, in this case, we have 2,000 revenue. We minus or we deduct the total of expenses. For example, from 2,000 minus 1,000, you get how much? 1,000. If this result is positive, it means we made profit. If this result is negative, it means we suffer loss. This is called what? Profit and loss statement. So profit and loss statement simply means how much revenue you received, how much expenses you incurred, so how much is the result, or what is the summary, whether it is positive or whether it is negative. If it is positive, you made profit. If it is negative, it means you suffer loss. One. Second thing, which is in the financial accounting, is financial position, or the second point which are needed to be shown in the financial statement in the financial accounting is financial position. Position statements, or we can say the balance sheet. These are just different names which are given for the statement which shows the financial position of the business. In position statements or in balance sheet, we record the following three things. We record our assets. We can call it ROE. We record our liabilities, which we can call it accruals. And of course, we record our capital, which we can call it what? Sarmaya. What do you mean by asset? We will explain in the second chapter, liability also, capital also. But for the time being, what is asset? Anything which you have with you and it has a value can be called as what? Asset. So now you think that what you have, I have a mobile, I have a computer, I have a watch, I have a glass, I have anything, it has a value, it's my asset. Now on the other side, what is liability? Liability means anything that you have to pay for the outsiders. Any amount that you have to pay for the outsiders can be called as what? As liability. For example, you purchase your mobile from the superstore and you promise to pay in the next month. So the amount that you have to pay for this shop is called liability. You have taken loan, for example, from the bank, from your friend, from your family, and so on, and then you have to pay it in the future. That can be called as what? As liability, right? You have collected tax of the government, but it's not paid yet. You have to pay in the future. That can be called as what? As liability. You, for example, you have to pay salary for the employees of your organization. It is not paid yet. That can be called as what? Your liability. Anything that you have to pay and you have not paid yet can be called as your liability. On the other side, we have capital. Capital means any amount which is introduced by owner of the business to the business can be called as what? Asset. So the statements which record all these three can be called as what? Position statements on balance sheet. What is the logic behind this one? Our asset should be equal to capital plus what? Liabilities. For example, if our asset is 4,000, our liability is 3,000, our capital is also 1,000, 1,000 plus 3,000 become how much? 4,000. So if both sides are equal, it means financial position of the business is good. If this result is positive, it means performance of the business is good. So this was the main objective of financial accounting. Once again, financial accounting is responsible for preparation of financial statements, for preparation of this one, as well as for preparation of this one, to communicate this result to the external users, along with external users to the shareholders, as well as the employees, to show what? To show the profit and loss, as well as to show the financial position, to show this one whether both sides are equal or not. This was the definition of financial accounting. After financial accounting, the second branch of accounting is cost accounting. Cost accounting is that branch of accounting which is especially used in the case of those organizations which they produce something, or simply we can say it is especially important or useful for manufacturing companies or those companies which they produce some products, right? So the company which they produce a product, of course, before determining the selling price, how much they sell in the market, first of all, it is needed for them to find out how much is the cost of that one. For the purpose of calculating the cost of their products, that their product is incurred, or how much is the cost of each product, they have to use this branch of accounting to find out the cost of their product. Now let's have a look for a few definitions of cost accounting. We define cost accounting in this way. Cost accounting is the process of determining and controlling costs of products. As per this definition, there are two objectives for cost accounting. Number one, it should determine the cost of the product, should find out how much is the cost, and number two, there should be some control on the cost. For example, we produce two products, product A as well as, for example, we produce product B. The purpose of cost accounting is to find out how much is the cost of A as well as how much is the cost of B. And after that, they should control it. They should control means, for example, why the cost of A is this much or why the cost of B is this much, why the cost is more or why the cost is less, and so on. So this process can be related with the cost accounting. Another definition which is a little bit elaborated one is as compared to the first one, which is a little bit elaborated as compared to the first one is this one. Cost accounting can be defined in this way. Cost accounting is the process of classifying, recording, allocating, ascertaining, comparing, controlling, and reporting cost. Right? See the point. Suppose we have two products, product A as well as suppose, for example, we have product B. Before recording the cost, first of all, we have to classify whether the costs belong to A product or whether the costs belong to B product. After identifying that whether it is belong to A, whether it is belong to B, so first we have to go for this classifying. Then after classifying, then we have to go for recording. After understanding that whether it is belong to A or B, then go for recording. Some of the costs might be belong to A, and some of the costs might be belong to B. Record under A as well as record under B. Next step is allocating the costs. All the costs which are belong to A should be allocated for A. All the costs which are belong to B should be allocated for B. After allocating, ascertaining the cost, it means finding out the cost. How much is cost of A and as well as how much is the cost of B. After that, the next step is the step of comparing. Compare the cost of A as well as compare the cost of B. Now the question is here, for what or to whom or to what to compare the cost of A? Basically, see the point? In the case of manufacturing companies, before to produce any product, first of all, they set a standard. For example, we can say at the beginning, they make an estimation that if we produce product A, how much should be the cost of A? That can be called as a standard cost. Not only for A, of course, for B also. They determine, for example, if we produce product B, how much should be the cost of this one? This can be called as a we can say as a standard, or this way can be called as a budget or budgetary controls. Later on we will discuss about this one. So here, so whatever is the cost of our product, we compare with that actual. Whatever is the cost of the product, we compare with the actual. After that, we go for the step of controlling, that why it is more, why it is less, then we go for the step of reporting. In order to understand this definition properly, I have made a simple example here. For example, I have given this point. Let us assume that we want to calculate the cost of markers produced. Let's also assume that the company produced 100 units. How many units are produced? 100 units are produced. For making a marker or some other products, for example, we incur the following cost. For example, Materials cost for marker. Some material cost is there for marker, it is $10. Materials cost, for example, for eraser, suppose this is another product, it is 6. Labor cost for eraser, for example, is 5. Labor cost, for example, for marker is 5. Other expenses for eraser is 3. And other cost for the marker is 5. Now let us apply those 4 or 5 stages which we have seen in the previous slide. These are the points. Now, after having the cost, which one of these steps belong to classifying, recording, allocating, ascertaining, and so on, I have given these points basically here. See, I have calculated the cost of marker. For example, out of this 6 type of cost, this is belong to marker, this is belong to marker, and this is belong to marker. For example, materials cost of marker is 10. Labor cost which incur for marker is 5. Other cost which incur for marker is equal to how much? Equal to 10, right? So the total cost for marker is equal to how much? Equal to 90. Now, also we have given information that in this product or in this company, how many units are produced? 100 units are produced. Now, cost per unit of products. 100 units are produced, cost per unit. It means the cost of each marker is how much? Or how much is the cost of each marker? Cost per unit is equal to $19 income for the cost divided by number of unit, which is equal to how much? Equal to 19. Now, what do we call for this step? Let us go for this point. This one, these 2 steps are in this one basically. A step of identifying as well as a step of classifying. Identifying, basically we have identified this is materials is for marker, this materials is for eraser, and after identifying we have recorded for marker. It means a step of identifying is before recording. It is just logically you have to understand that this is belong to marker. So we understood that this is belong to marker and this is belong to eraser, this is belong to marker, eraser, and so on. So a step of classifying and a step of recording is in this part. What is the step of allocating? This is basically the step of allocating, right? We have allocated the cost. Materials cost is for marker, labor cost for marker, this cost for marker, and so on. Total cost become equal to how much? Total cost become equal to 90, right? Then we have calculated the cost of each marker per unit. For example, we have calculated the cost of each marker per unit is equal to 0.9, and this step can be called as well as ascertaining. After a step of ascertaining, we have to go for the comparing. Comparing means, of course, we have to compare our actual cost, which is 0.19 cent in this example. We have to compare it with the standard. A standard, as I said in the previous slide, a standard means the cost which we set in advance. For example, if we want to produce marker, how much will be the cost of each marker? Let us assume that we have estimated that the cost of each marker should be equal to how much? For example, 0.15. But our actual cost is equal to 0.19. So actual cost versus a standard cost can be called as well as comparing. We have to compare it. After comparing, the next step is the step of controlling. Whatever is the result of comparing is then it goes for the step of controlling. So we see in this example, our actual cost is more than our standard cost. So here we just record, for example, actual is more than the standards. After that, we have to go for the step of what's controlling. What is a controlling? Because of X, Y, Z issues, we did not meet the standard. Okay? So this can be called as what? As a definition of accounting. So definition of cost accounting. Once again, let me summarize. We said cost accounting is the process of classifying and recording. So we have classified the cost, whether it is belong to marker or whether it is belong to eraser. This is eraser, this is marker, this is belong to eraser, as well as this is belong to marker. Then we have recorded in the proper book of account. It means before classify, you cannot record. We have classified and then we record it. After that, we have to allocate it for a particular product. All these three are belong to marker, we have allocated under marker. All these three are belong to eraser, so we had to allocate for eraser, but as there was no proper space, so I have taken only the marker. So this step can be called as what? As allocating. After allocating, we have to find out the cost of each marker. Suppose total cost was 19 divided by 100 marker. The cost of each marker is 19 cents. This is a step of ascertaining. After ascertaining, we have to go for controlling. Actual cost should be compared with the standard cost. Let us assume that we have assumed that standard cost is 0.15 cent, but our actual cost is this much. So definitely our actual cost is more than the standard. This can be called the controlling. And after that, of course, we go for the reporting. And in reporting, of course, we show that because of XYZ issue, we did not meet the standards, right? Controlling is very important. If our actual cost is more than the standard or our actual cost is less than the standard, we have to provide a reason for that, why it is more or why it is less. So this was somehow definition of cost accounting. I'm sure that it may not be that much good for you, but still I have tried my best to give a proper example for this one. The next branch of accounting is managerial accounting. Sometimes we can call it as management accounting as well. This branch of accounting is especially innovated or initiated or introduced for the managers in order to help managers to make a suitable decisions in their organization. A simple definition is given for this one. It is the process of collecting, collating, and converting the data from financial accounting as well as cost accounting system into a meaningful information for managerial use, such as policy and decision making. See, managerial accounting will not go for the step of recording, classifying, and so on. Basically, whatever is the outcome of financial accounting or whatever is the outcome of cost accounting, managerial accounting just collect those data from those branches of accounting. Collect data from financial accounting as well as collect data from cost accounting as well as several other branches of accounting. After collecting the data, it properly collating the data. Collating data simply means organize the data, sort the data. It means classify the data. After classifying the data, it convert this data into a meaningful information. And how they convert into meaningful information, of course, for this, there are several tools and techniques are there that how our manager can use the data of financial accounting as well as the cost accounting, and they convert it into a meaningful information for their policies and decision makings. Of course, there are several tools to convert the data and make a meaningful information. For example, ratios are there. They have to take several ratios that we may discuss in the next subjects, not in this one. For example, there are several analysis techniques like, for example, trend analysis, for example, vertical analysis, for example, we can say comparative analysis and so on, or for example, cost volume profit analysis, or we can say, for example, cash flow analysis, fund flow analysis. These are several techniques that can be applied on the data of financial accounting, on the data of cost accounting, and make a meaningful information for whom? For the managers. Let me go in this way. Suppose the data which is collected by financial accounting, or we can say by the cost accounting, may not be useful to the management directly unless it is processed properly, right? It might be useful for the outsiders. Outsiders just need, for example, the result, the overall result, for example, whether business made profit or whether business suffered loss. But management need detailed sort of informations. Management do not need only, for example, how much profit is made. They have to go in deep and find out the profitability and loss of each product, the profitability and loss of each department, the revenue and the expenses of each employees and so on. And for that purpose, they have to go in deep and analyze the data properly. Apply several charts, apply several, for example, graphs, several ratios, several other methods are to be implemented, and make a proper data for them and use it for policies and decisions making of the organizations. So once again, managerial accounting is the process of collecting, collating, and converting the data from other branches of accounting and making it a useful information for who? For managers to make policy and to make sort of decisions. Later on, inshallah, we'll talk about the qualitative characteristics of accounting information.